once you get that education, if you can get around people who are doing it, that's going to be very helpful because it's going to give you the confidence that there's other people that are doing it. And they could be old, they can be young, they could be just starting, they can be very seasoned, but you get around other people that are doing it, it's going to be very helpful.
Welcome to The Real Deal, a commercial real estate investing podcast. I'm your host, Aman Shahi. There's a ton going on in the world right now, and much of it impacts real estate investors. The Real Deal podcast will take a look at what's happening and how it influences you as a real estate investor. Each episode is a 20-minute segment dedicated to distilling the day's most important news, so you can stay up to date on what's going on in the world and how it might affect the commercial real estate market.
Welcome back to another episode of the Cashflow Capitalist Show. Today we have another very special guest who invests in self-storages. His name is Powell Chee. Hey Powell, welcome to the show.
Hey Aman, how you doing?
So introduce yourself in 30 seconds who you are.
Sure, Aman. I appreciate you bringing me on here, first of all, so thank you very much. So my name is Powell Chee. I live in Southern California. Been investing in real estate really since 2015 was when I really started owning my own properties, and have done some single family properties, have brought myself up to multifamily quickly after that. Also, more recently, I've been doing a lot of self-storage as well. So that's kind of it in a nutshell, but happy to go into more depth.
So how did you first get into real estate? Let's first we talk about that.
Sure. Previously, I had a W-2 job where I was in sales, and so I was doing pretty well there. So I decided that I wanted to, keep my money working for me, and so that meant where was I going to put my money? And didn't really, I looked at stocks and things like that. I just looked at a bunch of different things, but I really kind of settled on real estate, and I really felt that there was a lot of power in real estate. So I ended up buying my first single family house as a rental in Kansas City. So I lived in Southern California at that time, LA at the time, and bought that one in Kansas City. Sight unseen, I never saw it. I actually bought it and sold it and ran it for a couple of years, but I never saw it in person. But then that's what really kind of brought me is I bought that first one, did pretty well with it. I felt very good about it, but it just wasn't going to scale to the point that I wanted to scale. It was just not going to go fast enough. So then that's when I decided to move on to different asset classes.
So you said you also did multifamily. And how was the experience? How did you can you share us your first deal of multifamily?
Sure, absolutely. So about a year after I bought my very first single family house, so that was 2015 when I bought that. I bought another one in early 2017 this was a multifamily property. This was my very first multifamily property. It's a 40 unit building that I actually still have. It's in Indianapolis. And again, so lived in Southern California, bought something in Indianapolis, which was a big step for me. And that was, it took me a little while to find that deal, and then put it under contract. Luckily, I was maybe one or two people that were interested in buying that one, and put it under contract pretty quickly, and then move forward with the purchase of that property. But yeah, that was my very first one that I bought.
Was that a syndication or a JV?
No, that was neither. It was actually just me and myself. So it was just me and myself that I bought it. And the thing is, for me, is I wanted to make sure that I wasn't going to bring in anybody's money into something that I was just starting. Okay, so yes, I had a single family house, but I now was stepping into the world of apartment buildings. And I didn't really feel confident to, hey, I'm going to try to raise people's money when I haven't done this deal before. It was, I wanted to say, if something's going to happen, it's going to be a mistake. The person's going to lose money is probably me. Okay, and then I can handle that. It's my fault. So it's my issue. So after that, gained some experience, and then I thought, okay, now that I have some experience, I'll raise capital from other investors.
So how did you even make your mind from 1 unit to 40 units? That's it's not like 1 to 4, 1 to 40. That's totally different scenario.
Yeah, it was. I will tell you, obviously mindset is big, and I know that we're going to talk about mindset. Mindset is huge, and just hearing that other people were doing this was really inspirational to me. And whether it was 40, whether it was 20 units or 50 or 100, it really didn't matter the number to me. It's just hearing that people could buy a property in a state they don't live in, run it, manage it, and be successful with it was just something that I thought, if, you know, I'm not going to be the first person to ever do this, right? This is like, there's many other people out there that are doing it. So if they can all do it, I got to take my shot at this, and I should be able to do it too. And if I can't, I'll learn how to do it. I'll figure it out. But I was just confident that, like, I'm not reinventing the wheel here. Other people have done it. They can do it. I can do it. And hopefully that provides some inspiration to other people. It's like, hey, I've done it. I didn't know all that much at that particular time. I just thought, you know what? I know enough to go ahead and do it, and I got to just pull the trigger. I'm not going to overanalyze the situation and try to, you have these mental blocks where, like, I don't know if I can do it. I don't know. If you feel like you can, just sometimes you need to take that leap. Right?
And how did you find the property?
So I had been looking in three different locations. So typically I was looking in the three locations were Kansas City, which was where my single family house was. So I was looking at Kansas City, I was looking in Indianapolis, and I was looking in Memphis. Those are pretty much the three markets that I had chose at that time. And so I was analyzing deals, as many deals as I could find. I was underwriting as many, getting really sharp at the underwriting piece. And then as you're analyzing a bunch of different deals and deals are coming your way, every once in a while you come across a deal that is kind of outstanding. It looks different to you, right? And that's what this deal looked different to me than the other ones. And the way that I found this was actually, it was weird because when I found it, I was never able to sort of backtrack how I did it. But I was basically clicking through people's listings. So say it was like there was a listing that was on something like Crexy, and then I went to their main website, and there I found other brokers who were part of that organization. And then I went to their sites, and I just kind of kept clicking around and kept clicking. I ended up on this site that I had never seen really before, and it was really more of a business exchange site. So it really um, wasn't even like a real estate site specifically. It was like Business Exchange of Indiana, and I thought, I don't even know if this is real. Like, I looked at this listing and I was like, I don't think this is even legit. I don't know. I don't even know because I wasn't sure. And it was listed by a residential broker. So it wasn't a residential agent, right? So it wasn't even a business broker or a business broker or a commercial broker. It was a residential agent. So I think that that was like her network of people. So I called her up immediately and said, "Hey, is this deal? Is this live? Is this happening right now? Is this? Can I get some more information?" And she was like, "Yeah, we just put it up about a week or two ago, and got some inquiries, but happy to send you some more information." And so she sent me more info. I underwrote it a little more thoroughly and thought, "Hey, this is something I'd like to pursue, and I want to go for it." So it was really, finding this deal was not one of these things that was just very straightforward. It was a lot of kind of clicking through other, directories, then looking through people's personal like websites, then looking at their business websites, then just kind of clicking and clicking and finding more and more like links to where other people have deals. I found this deal, and yeah, I mean that's how I found it.
So you were hungry.
Well, yeah, I was eager. I was like intent on, like, I'm looking intently at as many different sources I could. Right.
Nice, nice, nice. And I have a question. So there are so many people who are doing investing in single family, and they want to invest in multifamily or different asset class, but they are still feeling like they are not ready and all this thing. What do you want to tell them? What do they need to prepare for multifamily, or just jump it?
Sure. Well, first of all, you need to get educated, right? So you need to get educated and learn the difference between multifamily and single family, because there is a significant difference. Um, but once you get that education, if you can get around people who are doing it, that's going to be very helpful, because it's going to give you the confidence that there's other people that are doing it, and they could be old, they can be young, they could be just starting, they can be very seasoned. But you get around other people that are doing it, it's going to be very helpful, and they're going to challenge you, and eventually, the the two major things that you really need to focus on to acquire a deal are you need to focus on the acquisition side, which is underwriting a lot of deals. You need to get good at underwriting. So you need to be able to basically see the numbers and be able to really tell, even without doing a full underwriting, that you can kind of read into the numbers and tell if this is going to work as a deal. Second of all, so that includes, so in acquisitions, that includes talking to brokers. So you need to be able to reach out to a lot of brokers and get as many deals coming in. So you have a good pipeline of deals that you're analyzing all the time. And I will tell you that it takes, they used to say it takes like an average of like 100 deals to get to maybe 10 that you put an offer on. And then of those 10, maybe you actually get under contract like one, right? That percentage is probably a lot higher now. So it's probably more like you look at 150 to 200 deals. Now, it doesn't mean a full underwriting of every single one of those deals, but you need to look at 200 to plus deals to get that one that you're going to put under contract. So if you're only looking at 2 a week and you're only analyzing 2, 3 a week, I mean, you're looking at 2 years before you can get through enough deals to make that happen. So it just plays as a numbers game and just kind of reverse engineering. If you got to get through 200 deals or 100 to 200 deals, you better be pumping out 10, 20, 25, 30 or whatever, however many deals you can look at a week, right? So that's what you need. That's what you need to do. So that's one main thing. The second part is the capital, right? Is really just figuring out the capital. And I'll tell you how I did it on my very first one is that I knew how much money sort of I had to be able to put towards a down payment. And when you know how much money you have towards a down payment, you can sort of reverse engineer, figure out what is your purchase price. So I knew what my purchase price, sort of max purchase price was. And so then I could only look for those deals. Because if you're just looking at random deals, there's going to be something that's, hey, this is it's $400,000 and it's like it's 6 units in Missouri. And then you're also looking, there's in Florida, there's a 200 unit property and it's $35 million. And it's like, you have this whole range of what you're doing. And to me, that's too much. Like there's way too many deals out there to look at just like this huge range of apartments. So for me, it was like knowing how much capital I have to put into the deal, or even how much capital I can raise for the deal, whatever, just a solid amount of like, this is how much I'm probably going into the deal with. That will give me an estimation of where is my purchase price going to be. So now I'm only looking for deals that are going to land within that purchase price. And then that way I can focus on those particular deals and not get distracted with, oh, this deal looks awesome, but it's $45 million. And the chances of me doing this on my very first one is very, very slim.
So you only focusing on one range of purchase price and targeting only those ones, not just like all over the place.
That's how I did it. Yeah. Because I figured that's the fastest way. I mean, I knew I had that much money. Now the chances of me raising $5-6 million to get my first large syndication done, I mean, it's going to be very little. I knew that I knew what I had as far as the money that I had and could get this deal done at that price. So I was going to go do something in that price
Got
range.
it. Got it. So if we talk about self storage, can you share what is a self storage? Why we need it?
Sure. So, and just to backtrack a little bit of story wise, I ended up getting up to about 1,100 units in multifamily. So that's like 7 different properties, 5 of them, 5 syndications. 2 of the other ones were joint ventures or just done by myself. But then when COVID came around, I really decided, let me look at another asset class as well. Let me put another asset class to my mix, just with a lot of uncertainty around multifamily and residential in general at that time. So I looked at self-storage was the one that I chose. And I really liked what I saw in terms of on paper and listening to podcasts and things like that. It sounded great. But then I said, let's actually go get a deal and let's see if this will actually be true in reality, what you see on paper. So, what, so that's when I ended up getting into self-storage. So my very first one was in January 2021. And since then, I think I'm up to 16 properties right now. And so, when you're looking at storage, one of the main reasons why it was attractive to me was its performance in the last two downturns. In the last two downturns, I'm talking about the Great Recession in 2008, and I'm talking about during COVID. Okay, and self storage at that time performed extremely well in 2008 and 2009. Now there was a lot less inventory. There's a lot less self storage facilities during that time, but they did extremely well. And they started finding out that the reason why it did extremely well during that downturn was because there's the main drivers of storage are present no matter what economy. And those are things like divorce, death, um, dislocation. So if you have to move, um, disasters, there's a number of different things that just are just main drivers for storage that happen all the time. Doesn't matter if the economy goes up or down, right? Um, and so that happened again in 2020 for about the year and a half that we were under COVID. Same situation as that. It did extremely well during that time because I mean you can imagine everybody moved home, and so everybody you don't have enough space, and it's like okay, well if everybody's home and I got my home office and all the kids are here, I need to put this stuff somewhere. So they put it inside of storage, and so that's why it did really well during that time. Mm-hmm.
Mm, Even I used self storage in 2020 when COVID happened. Then I'm like, okay, this is a new asset class. But I did not know that you can also invest as a syndicator or LP or GP. I didn't know that, but I was only thinking like maybe the only big companies own those things, only big private equity companies. Yeah, but
Yeah,
yeah,
I would tell you this: just a little bit difference between multifamily and storage is that in multifamily, once you get sort of above the say 100 units or more, it's almost all private equity groups, large, sophisticated groups that own these properties. So it's like I don't know, 80%, 90%, something like that, that own these properties that are 100 units or more. So very sophisticated buyers and owners. In storage, it's kind of the opposite. If you take all the storage in general, um, it's like 25% are owned by the big REITs, private equity groups, hedge funds, sophisticated buyers. Anybody that owns like more than five it's only like represents 25%. The rest of the market is really fragmented. So it's 75% are really mom and pop, which represents a big opportunity for people inside of self storage.
and what kind of investors can invest in self storages?
It could be really, it could be everybody, anything from just a single person that wants to buy their own property and run their own property. So I know of people that have basically they took their own money and they bought their own one and they are going to run it and they're going to manage their own property and they're fairly, they're on the smaller side, but you can do that as an owner where you're just doing it by yourself. If you are looking to be an investor, maybe doing maybe partnering with people, you can do joint ventures where you have a small group of people and then you go out and you know, buy a facility and run it together. I've done that on several of my deals where it's just a small group of us and we own it together. And then I've also done ones where we syndicate it, where it's a larger opportunity, and I'm bringing in passive investors, and then basically my team or the general partners, we're all together. We're the active people on the deal, and we're there to run the deal, and we have passive investors who are helping us out with the equity side.
Got it, got it, got it. So when you underwrite any self storage deal, what KPIs do you keep in mind to decide if that's a good investment or not?
hmm It's very similar to multifamily, but I will tell so when you're underwriting, obviously you're looking at top line expenses, right? And then, sorry, top line income, and then you're thinking about other ways that you can add income, right? So when you're doing your underwriting, is the seller taking advantage of everything that they could be, or are you able to bring in some other ways of bringing in money, or whether that's ancillary services you have, or whether that's you're just going to do a better job of running the property, you're going to collect better, you're going to increase rates. And then as far as expenses, it's similar to multifamily in that you're looking at some major expenses like property taxes, insurance. Those are going to be very high. And then it depends on how you manage the properties. We manage ours remotely, so we don't really have a lot of payroll costs. So payroll can be reduced significantly with the way we run it. Um, and then other things, you just don't have that much expenses compared to multifamily when things like um, utility costs. Utilities are much lower, right? Are much lower than maintenance is much lower. And those are some of the main things that you're looking at. But I would say also you're targeting a different sort of market. Like in multifamily, you're probably looking at the whole MSA. You're looking at the whole metropolitan statistical area, right? You're looking at how is it doing, job growth, job growth, income growth, job diversity, things like affordability. Those are all super important. Whereas in storage, you're not really looking at the whole MSA to decide whether or not the city is good for self storage. You're really looking at the micro market. You're only looking at a 3 to 5 mile radius in that city. So you could choose a city and say, in multifamily, you would say, oh, the city is not good, or say the city is good. But in storage, it could be good in only a small sector of that city. Maybe the rest of the city is overbuilt and there's too much storage in that other part of the city. So you really have to look at the micro market in the neighborhood to understand if your storage is going to be successful or not.
And what are the ways are you implementing to increase the income on the self storages? Like any kind of like solar or anything?
Haven't done solar yet, but when it comes to increasing the income. There's basically four different ways that we're looking to increase the value of our properties, right? The value add that we're looking for on any of our properties that we're either buying or that we have. And that is, we're looking for things like low occupancy, right? So if the occupancy is low, so we bought properties that were 55, 60% occupied. Low rent. So the market rent, say the market rent is $1 per square foot, and we look at the rent at our place and it's like 70 cents a square foot. So there's a certain delta there that you can achieve. Um, there's other things like expansion. So multifamily doesn't tend to have as much issue, like doesn't yes, you might get a extra, a bigger lot, but generally the people that I know aren't necessarily thinking about building. There's a few people that are thinking about building and developing and expanding, but for the most part, just buying existing as is. But in self storage, you're also looking at ways to expand. Like where can you put some other storage units, or can you add parking? What are the things that you could do with extra land that's there? And then the fourth part is operational inefficiencies. Is really looking for ways that you can cut your expenses. And like I mentioned, payroll can be one. Utilities can be another one. There's a number of different ways that you can cut your expenses, depending on how you run the property, right? And so, those are the things that we're looking for.
And how are you also, if you talk about the payroll, how many people do you need, and how many people are you hiring for repairs and all these things? Because in multifamily, you need a whole team for the contractors and everything time to time. What kind of scenarios that we have in the self storages?
Yeah, I mean, it's quite different in self storage, right? So, and I can only talk to you about how I run things. I'm not talking about how everybody else runs things because everybody else is a little bit different. But the way that we run our facilities is we run them all remotely managed, which means it's non-traditional. The traditional model of how to manage self storage is there's a person in the office. You go visit the person in the office after work, and you sign the lease. They give you a tour. They show you where the unit is, and you pay for it, and then you get buy a lock or something, and then you're able to rent the unit, right? Um, and in those cases, you will have payroll costs because you got to have a person there, 7 days a week probably, and it's probably from 9 to 6 p.m. Right now, in our case, we don't do that. We don't have a person in the office, so when a person shows up to rent, they're going to see the signage, and the signage is going to point to basically three different ways. It's going to say, here's a phone number to call if you're interested in renting, or here's our website. You can rent on our website, or you can scan the QR code, or do that type of thing. But now a person doesn't need to show up when somebody's there. because they can show up from 7 a.m. to like 7 p.m. So that the hours are extended, right? Before it was a person was only there from 9 to 6. Now it's 7 a.m. to 7 p.m. You can just call, or and if you're doing it online, it can be done 24/7. So there's no time restriction there. And then so when it comes to that process, we're not hiring anybody into to do any of our incoming handle our incoming tenants. What we do have is that we have a contractor who will help us out with maintenance. Okay. So the contractor will help us out on maintenance. So they're going there by the property to do a lot of the maintenance, check on the property, check on the fencing, check on the gates, check on the units, do overlocking for us. But they're not customer facing. So they're not there to handle any issues with customers. They're there just for the maintenance side. So we do pay for that. But paying a 1099 maintenance person who's only there part time is very different than paying somebody on payroll who's there 7 days a week, or multiple people that are covering all 7 days a week. Right?
Hmm. Even I use that kind of self storage too. Like scan the barcode, go to website, book it, and buy the lock and go to storage. Put the stuff in, and I was like, do I need anybody here?
Yeah, I know. Makes it easy. It actually makes it more convenient for people. Like I said, you don't have to be there. I can give you an examples of why, in ways that we've improved after buying properties, that and why this is an improvement from other people. But I don't know if you want me to. I'll give you an example.
Yeah,
If,
yeah, yeah.
if
Go
not, we
for
can
yeah.
just press on.
No, no, go for it. Go for it.
So we've bought several different properties and from people, and oftentimes the properties are you're not able to rent online. So they have a website, right? But it's an informational website. So it's like, hey, here's our address, and here's our hours. Here's the types of units that we have. But when you click, you cannot click rent. You cannot actually rent on their website. So that means you need to go to their office when somebody's there. And I'll tell you, on the weekends, they have reduced hours. So it's not even like they're available all the time. We bought some of our first ones. The person was only in the office 4 hours a day. So they're only in the office from 1 to 4 p.m. That's maybe 3 hours, 4 hours, but they was like basically 4 hours in the mornings or 4 hours in the afternoon. So if you wanted to rent from them, you had to go there from 1 to 4 p.m. Monday through Friday. You can't go there on Saturday, Sunday. So how many people are able to go Monday through Friday, 1 to 4 p.m. to rent your unit? And so that property was 60% occupied, right? So when we took it over, now anybody can rent online, or they can call our call center, which is 7 a.m. to 7 p.m. that they answer these calls. So people were just a lot more, the access to our facility was just a lot greater on just a simple thing. And you don't, you don't, you think it would be like universal that everybody, yeah, of course, you should be able to buy something on your website, buy the service. It's not universal. And like I said, 75% of these facilities are owned by mom and pop, and they've been running it the way they've been running it for a long time. And the idea that you could just rent like that online is not always true.
Got it. Got it. So, and at this point, what kind of future trends are you seeing in the self storages?
Yeah. Well, I'll tell you right now, as an investor, it's getting a lot hotter. There's a lot more attention on self storage. And I think this is for a number of different reasons. First reason is because a lot of investors feel that we're trending towards a potential downturn, and we're trending towards a potential downturn in the economy. And so they're looking at what asset classes did well in the previous recessions, and self storage has stood out in both recessions. So they're like, okay, well, self storage is doing good. Okay, great. And they're hearing all this great things about self storage. Oh, great! It's easy to build, a lot easier than multifamily. So there's a lot of attraction there. There's also a lot less attraction in other asset classes. Previously, there was a lot of attraction in something um, like office space, right, and large office space. But all those, with people like now working from home, and businesses are not really interested in renting out, large office spaces for long periods of time, and they're about to cut all these leases. Um, a lot of that money is fleeing and going towards other asset classes. So they're going to multifamily, and as well as multifamily is also going to storage because multifamily is so hot. It's like so competitive. So that's the trend that I see like right now is that a lot of this is bleeding over into self storage as an investor. So there's a lot more competition in self storage right now than there was just even a couple of years ago. Um, and so people have to be prepared for that. The other trend that I don't know that too many people are talking about and making it public, but as an investor, you need to know this is that we are no longer in the COVID days and the spike of COVID. So self storage shot up like crazy. Rates went way up. Occupancy went way up. Very hard to get your self storage facility, or very easy to get it full and running very well during COVID. We're not in that anymore. Things have trended down. So we're much more in the pre-COVID times right now, where there's a lot less um, searches going on for self storage. There's a lot less. Your occupancy is dropping and things are trending downwards. So investors got to be aware of that. Now, is it going to, there will be a point where it'll start to even out, and it's probably maybe even starting to do that already. But we're no longer in that peak of COVID times where we were before.
And where are you seeing yourself? Are you going to invest more in self storages or multifamily?
Yeah, that's a great question. I appreciate that, Aman. So, what I tell people is this: when I started, I was just kind of a multifamily guy. I was only multifamily. I was just going to, hey, I'm going to do multifamily the rest of my life. This is it. Um, then I started to transition to self storage, and I realized, hey, maybe I'm going to be a self storage guy. I'm going to be the self storage guy, and this is what I'm going to do the rest of my life. But I really quickly, after that initial kind of burst, I really just said, you know what? I'm not really a self storage guy or a multifamily guy. I'm a deal guy. I'm looking for what I consider the best deals are out there. So that can be self storage, that can be multifamily, that could be a totally different asset class. That can be medical office or something. Or short-term rental or whatever. It could be a totally different asset class. I'm looking for what I consider the best deal. And the best deal is like my personal criteria. And it doesn't mean just what are the returns, because if something makes a 17% IRR and another thing makes a 16% IRR, I'm always going to go with a 17% IRR. No, that's not true. I look at a lot of different things. So I'm looking at things like certainly what is the asset class, where is the property located, what like type of asset is it, like ABC, like what type, who's the team that's going to be behind it, what's the business plan, what are the returns. Those are all different factors that I look at to decide what I think is the best deal. It just so happens right now the best deals I'm finding are in self-storage, but that's me personally. And so I'm continuing that. But in terms of like, will I find another asset class that has better deals that I really think this is the better way to go? Certainly, I'm very, very open to that.
And if you talk about your investors, what are they more focused on? Like, are they focused on you or asset class? Because if the way you're saying, like you're more focused on the deal. If they're expecting a self storage and you present multifamily, will they invest in that?
hmm Yeah, I mean, I think it all depends on which investors, right? So some investors, the answer would be no. They're only looking for a specific asset class. They want to work with a specific asset class. But for the most part, I feel like I have a good connection with a lot of my investors, the majority of them, and they're really looking at me first. Like, okay, you want to go to a different asset class, pal? That's great. Tell us why and why we should be okay with that. And if they feel comfortable with that, they're like, okay, yeah, I'll trust you kind of moving forward. Because they've already known that I've went from single family, multifamily, now storage, now something else. So they're very much, especially the ones that have been with me for a long term. Like the very first self storage deal I didn't tell any multifamily. Well, I didn't tell any of my network, which was mostly multifamily at that time, because I was like, again, I was a multifamily guy, and all of a sudden I'm doing storage. I didn't want to like freak them out because I had this concern that you were just bringing up. So I asked about 7 people, mostly friends and family. Hey, I got this self storage deal. Anybody interested in doing this? It's a new asset class, but I think this is like a great way to go. This is my very first one. 6 out of those 7 people said yes and invested with me. And so it was just like, they went with me right away. And then after that, after I closed that first one, then I let the rest of my network know, hey, I already closed this deal. I got other ones coming up and I'm probably going to look for more. Are you interested? And a lot of my network has been interested. And I'm actually, it's not that I'm not only presenting like, or only into storage. Like if I find a multifamily deal, that's great. I'm going to present that as well. If I find another asset class, that's great. Then I'm going to present that as well.
Got it. Got it. So you already built that trust, and when you did the first deal, then you present to everybody else with the
Yes.
investor that you had
Yes.
the trust. So the trust
Yes.
is the most important thing.
For sure. For sure. The trust is the most important thing. I mean, there's a lot of people that I know that trust, they just, you know, probably shouldn't, but they just kind of say, oh, why, pal? Just tell me about the story of the deal. And they say, okay, I like the story. Sounds good. I'm in. All right. And I'm like, well, you should probably do a little more research than that, than just listen to me, like do some more research, talk to people before you just decide to invest. But I do have a lot of people that do that, as well as I also tell my investors this as well. So it's important to communicate to your investors that you look at other asset classes, because if they're just thinking that you're just a multifamily guy or you're just a storage guy and that's all you're doing, and you're constantly telling them this is the best asset class, this is the reason why you should invest, is it's just this. Then all of a sudden, if you change, it's like, well, wait, you were just telling us how this was the best asset class, and like why now is it different? So from for a while now, my messaging has been different of like, hey, this is a great deal for what we're seeing right now, but that doesn't mean that this is the only asset class that I'm gonna present to you. I'm gonna be presenting other things to you, and if you're interested, great. If you're not, it's okay. I understand. So.
Got it. And so, what message do you want to give to somebody who wants to start into self storages? Somebody who's totally new to self storages.
Mm-hmm. I mean, the first thing is get educated, right? Like I said before, get educated, get around people who are doing it. So start meeting other people who are doing what you want to do yourself. Um, Join meetups, or join Zoom calls. Listen to as many podcasts as you can, like yours, Aman, and find those people and connect with them, and then really start to hone down of what is your buying criteria. Okay, so you can figure out from your buying criteria, like maybe how much money you have or how much money you can raise, and that can give you an idea of like what type of deal you want to buy. Because it might be a smaller one. Those first two ones that I bought were two of the smaller ones that we have. I probably don't even look at that size anymore, but you can always start at a certain size and then you can grow from there. So, I would say ideally, that's the thing: get educated, get around people, and once you're ready, figure out how much money you can invest or you have that will invest with you, and then start taking the steps to go acquire a deal. So that means underwriting a lot of deals and getting a lot of those, like we talked about, underwriting 20, 30 deals a week, right?
Yep. There are so many books on multifamily residential. There are not enough books on self storages. Can you recommend any book that people can read if they want to invest in self storage?
Yeah, I mean, like, I don't have any specific book out there that I think is like the best for it. And things have changed so fast too, because with a lot of the books out there did not include anything with COVID, right? And COVID is a big part of it. And then now we're out of COVID, so now it's changed significantly, and the lending environment is different. And we're kind of a lot of people, like I said, we think we're heading towards a downturn. So that's not all in these books. So um, yes, there are some books out there. I generally try to trend towards like listening to more podcasts because I want to hear more live, more recent, um, resources, and so talk to people that way versus purely studying in a books. But I mean, you're right. There's not as many books out there in self storage. There's not as many mentors or mentorship groups as there are in multifamily, so they're harder to find. But there are some out there.
Yeah. And I have three more questions, all on mindset. Just be ready for it. So, what's your morning routine as an entrepreneur?
Yeah. So I've built my. Let me caveat this by saying I did a certain morning routine for a number of years, and I built a what I felt is a really solid foundation. Okay, so I followed previously for a while the Miracle Morning um, by Hal Elrod, great book, but it's basically like, hey, there's a bunch of different things that people do. that are high achievers in the morning, whether that's reading, writing, affirmations and exercise, a bunch of different things, right? And his idea was just to do the whole thing, do them all, and then sort of figure out what was best for you. I found out what was best for me was really the best for me was the meditation, right? And then a little bit of like some exercise. So I would do like some yoga in the morning. But I used to wake up pretty early and do that. And I set up myself a pretty good foundation for working hard in the morning. Then I had my son, and my son came along, and he changed everything. And he's like, it's been very difficult for me to like really get back into that morning routine where I can wake up early enough and that I don't get disturbed by him. So the morning routine has turned more into a night routine where he goes to bed a little earlier and I can do stuff at night. And then we end up waking up around the same time. So, but yeah, those are things that I have been focusing on and to help me improve and get better. So hope that answers your question.
Yeah. And if you have to go back in time and restart all over again, what would you do different?
Boy, that's a great question. I mean, besides the obvious would be to start earlier, right? But I think the thing that comes to mind to me mostly is to ask for help. Like I'm one of those people that never really ask for help. I don't really like asking for help, and I don't really like. I don't know. Maybe it's just feeling vulnerable or something. But I think
I feel you.
what
I
I
feel you.
could, yeah, what I would do younger, and I'm trying to teach my nephews this, is like there are a lot of people around that are doing a lot of things that you might want to do, and if you ask them, they will help you, and it may not be. Um, they'll help you take the next steps. They might not help you achieve exactly what you want to achieve because they might be in a totally different field. And I think about it growing up that there was a business owner that I knew was my friend's dad, and he was a business owner, really successful. And I knew he was successful. You could just see it. Like he'd just go to his house and he'd had all these parties and this and that. And I never really asked him. Like he would tell me. Sometimes he told me about some of the cool things he did, but I was always like, "That's really cool." But I never really asked him about like how could I do that? Or I have this business plan. I'm trying to do this. What do you think about that? Or how did you get to this point? Or like, how did you partner? I just didn't ask him any of these questions. And I think that really would have accelerated my growth is if I would have really started asking a lot more people for questions, asking them for help, asking them to look over my business plan, asking them, hey, I'm going to try to do this. What do you think? And then for them to just give me some guidance, right? And a lot of people like that when you're young and you find somebody that's had some success, they're super eager to help you out. If they see you're hungry and they want you to succeed and they want to feel like they've got some good influence and in a positive way, they're really apt to help you. And so I think that would probably be my advice to people is like, there are people out there. They may not like, you might be just learning about real estate or just learning about multifamily or just learning about self-storage. And you're like, oh, I don't have anybody that knows self-storage. They don't have to know self-storage. They could just know business, right? They could just know business. They could just know, maybe they're successful at networking. Maybe they're successful at creating the website or whatever. I don't know. It's like you got to learn, like take those steps to ask people how to do it, and get comfortable with sort of that part of the relationship of just asking for help and advice. And I think that would probably be my thing that I would
Nice,
change.
nice, nice. And the last question is: imagine today is last day on this planet. What
Hmm.
message do you want to give to the world?
Oh boy, that would be a tough one, right? You know, I guess just for me personally, I try to think of like living a good life where I have influenced people to do something, um, maybe not different, but something that they want to do, right? That I took a different path than a lot of my friends did. Like I went to college and everything, but I studied some weird major, and then and then after school I didn't get a job. Like I could have got a job at all these big Silicon Valley companies that were hiring at the time. They were paying bonuses to people. Like if you sign on with us, we'll give you a $5,000 bonus. And I wasn't taking any of those jobs. Um, and I just tried to kind of forge my own path. And hopefully I've been inspirational enough to somebody, to some people, whether it's somebody I'm close to or some of my family or just even somebody else that's just kind of I was able to touch, and just say that like you can forge your own path and be successful. If you really put yourself in that position and go for it. You find the right people, you get around the right people who will help you, and hopefully I've been able to inspire some people to do that themselves as well.
That's a beautiful message. And if people have to reach out to you, where can they reach out to you?
Sure, appreciate that. So I have two ways. Probably the best way is to get a hold of me. If you have Instagram, you can search for me. It's at Powell.Chee. So just my first name dot my last name, Powell.Chee, is my Instagram. And if you just DM me, if you're interested in, say, like setting up a time to talk, or you want to see my deals, if you DM me my business name, which is Radiant, so if you just DM me Radiant, I'll send you a message like automatically back. But otherwise, if you just want to just have questions, you can just DM me there. Also, if you are, I guess the best way in terms of email, if you don't have Instagram, it's just my first name. It's Powell, Powell, at Radiant WE, so radiantwe.com, and that's my email. So happy to connect with anybody there as well.
And thank you so much, Paul, for your time for today. And I really appreciate you. And thank you for all the knowledge that you share and your wisdom. And we'll see you another one.
Appreciate the opportunity, Aman. Thank you so much, buddy.
Thank you so much, Paul. Thank you.
Thank you for joining us on The Real Deal, a commercial real estate investing podcast, the show that covers everything to do with multifamily real estate investing to help you become an expert in your real estate ventures. We're here to help you create passive income and financial freedom so that you can achieve what you want whenever you want. We'll catch you next time on The Real Deal.